And that gets back to what are we doing here as investors? What is our goal? My goal is to make money. If your goal as an investor is not that, then I would find a therapist and speak to that person and find some help.
Hello everybody, this is Anthony for Investors Underground. In this episode, I have the opportunity to speak with a chartered market technician whose innovative approach to charting and market analysis have made a significant impact in the financial world. He's the visionary behind All-Star Charts, which began as a blog in 2010 and has since evolved into a technical platform utilized by hedge funds, institutions, and retail investors alike. He's been featured on major networks including Bloomberg and CNBC, and is a co-host of Stock Market TV's The Morning Show. It's my sincere pleasure to introduce Mr. JC Parets. Hello, JC. Thank you for being here and taking the time to speak with me today.
Thanks, Anthony. Appreciate that. And I appreciate the intro. Thank you. That's nice.
Absolutely. I mean, well-deserved, and you've done so much for charting and just the world of finance. I'm a fan of what you do, your blog, fan of The Morning Show. Highly recommend everybody go and check that out. Whether or not you're interested in macro and some of the things that I know you, JC, focus on, or our audience, which tends to be, from the IU side, more of the short-based traders and folks who might just be trading individual stocks. But it's always great, I think, to have a bigger picture approach because you might not always be a short-term trader like that. So that's where JC comes in.
Yeah, I mean, listen, a little bit offline, we were talking about Brian Shannon, a friend of mine, someone who we both have a lot of respect for. His first book was Technical Analysis Using Multiple Time Frames. And, Brian Shannon, is more of like a swing trader and, is looking at a 5-day moving average and, some short-term and longer-term anchored VWAPs. And he really incorporates that multiple time frame approach. We do the same thing using some of those methods and others as well. That's the beauty of technical analysis, or one of the many beautiful things, is that we can incorporate longer term trends within the context of what's happening in the shorter term, and that's why technical analysis works, because asset prices trend. We know that. So what is technical analysis? What are we doing? We're looking for trends, right? So if you're fighting trends or you're ignoring trends, like if we know for a fact that asset prices trend, and we do know that for a fact, then why wouldn't we spend a lot of our time looking for those trends and trying to ride them is really how I look at it. And the market is what we like to refer to as fractal, meaning that the trends and the way the market behaves on an intraday basis is going to be very similar to how it trades in a little longer term basis, in an intermediate term horizon. When you zoom out looking back decades, the patterns are the same. The human behavior is the same in all of those different time horizons. So being able to recognize that, can be applied regardless of your time horizon. Now, are there ways that the market behaves differently in shorter time horizons versus longer time horizons? Yes, of course, right? You're going to get different sorts of behavior, different sorts of volatility. Everything is relative, but the patterns and the behaviors remain exactly the same. It's really, really fascinating.
Absolutely. At the end of the day, these multiple time frames are only more pieces of data that can help rather than harm you, one would assume. And correct me if I'm wrong there, but yeah, it's great to have more data, more information than less in this world of trading.
Listen, to a certain extent, there's data overload and information overload as well. So it's also important to focus the majority of the time and our attention on what actually matters. And that gets back to what are we doing here as investors? What is our goal? My goal is to make money. If your goal as an investor is not that, then I would find a therapist and speak to that person and find some help. The goal in investing, regardless of time horizon, short-term, day trading, long-term, what is the goal? To make money. Okay, so how do we make money? We make money by selling things at higher prices than where we buy them. That's how we make money. So if we're reverse engineering what the ultimate goal is with the best ways to accomplish those goals, which is make money, it's like, okay, sell things at higher prices than where we buy them. Terrific. Now, how do we do that? Well, we know for a fact, if you're into white papers, there's plenty of them, asset prices trend. We know they go up for a while, they go sideways for a while, they go down for a while, they go up for a while. And again, they trend on multiple time frames. As short term as you want, look at tick data, they trend. Look out, decades, and you'll see trends too. Up, sideways, down, the whole thing. Asset prices trend, we know that. So if we're trying to sell things at higher prices than where we buy them, maybe we should try buying things that are going higher. Or if we're shorting stocks, and again, when we're shorting stocks, we're still selling them at higher prices than where we buy them, if we're making money, of course, just not necessarily in that order. We're selling it first and then buying back at a lower price. So if that's our goal, to buy it back at a lower price, maybe we should be selling things that are going down, right? Because we know that that's the trend. So it's about recognizing the trend. Now, we're talking specifically about equities. By the time we get to our equity analysis comes within the context of a more macro intermarket picture. So before we even get into what the S&P 500 is doing, we've already gone and looked at every other country on the planet. Everything in Latin America, Mexico, Brazil, Chile, Peru, the whole thing, Europe, Sweden, Oslo, Helsinki, London, France, Germany, Spain, Italy, Greece, the whole thing, Austria, keep going, Portugal, we're looking at all of them. We're in Asia, we're looking at Korea and China and Hong Kong and Singapore and Taiwan and the Philippines and Malaysia and Jakarta, Australia, Canada, across the board. So by the time we get to the United States, it's like, okay, is the United States doing what those others are doing? Or is the United States behaving differently than those others are doing? Which regions around the world are doing the best? Which regions around the world are doing the worst? Maybe there's a country in a particular region that's very different than some of the than what the rest of the countries are doing, and that gives perspective. In each of these countries, there are different groups of stocks and companies that drive those indexes. So understanding which countries are working is also giving us information in terms of which types of stocks are working. For example, the United Kingdom has 0% energy exposure. Chile has technology. UK has zero technology. Chile is a mining and resources economy. There's no technology there, right? So if these sorts of countries are doing well, that's information versus countries that are more, I'm just using one example, right? If you look at a lot of these countries like Canada and all over Europe, they got a ton of industrial exposure. What do you know? Industrials in the United States are working great also. So looking at what's happening around the world confirms essentially, or gives a heads up that maybe we should be looking, man, Chile and Latin America, these things are ripping. Maybe we should be looking at more materials and mining companies and energy companies because Latin America is telling us something, right? For example, Europe is completing a top. Germany is breaking down to new 52-week lows. Japan is put in a failed breakout in a hypothetical situation. There's information that the rest of the world is falling apart and the United States might be hanging on, but there's a lot of other information of deterioration. That's part of the breath work that we do. And that's when, and at this point, we'll do the same thing with commodities. Every single commodity on the planet, metals, energy, agriculture, the whole thing. We'll do the same thing with all of the energies, right? Whether even in uranium and coal, but obviously the oil and the gas, heating oil. So by the time we get to U.S. equities, it's like, okay, great. We already have all of this context to put what now we're looking at to be able to make money in the equities market and say, okay, now the S&P 500 made new highs. Terrific. How many stocks in the New York Stock Exchange are making new highs? Are we seeing more and more stocks making new highs, or are we seeing fewer and fewer? Are we seeing broadening participation or deteriorating participation? Because that is really what the market is doing. The Dow doing something or the S&P doing something or the NASDAQ doing something is only so much information, because there are formulas of stock behavior that will give you those numbers versus most people will not take the time to actually go stock by stock and count how many are going up, how many are going down. And that's the leading indicator. The indexes are lagging. It is the internals of the market that are leading. And part of the global macro look and looking at what all the countries are doing is part of that. What are all the countries doing? What are all the sectors doing? Financials, industrials, technology, materials, are more of them making new highs, or some of them breaking down and making new lows, or more of them right? We do the same thing at the industry level, because just because you have healthcare as a sector, you got all kinds of stuff in healthcare. You got medical equipment, biotechnology, pharmaceutical, managed health. I mean, these are vastly different types of companies. In financials, you've got broker-dealers, you've got regional banks, you have insurance companies, you have capital market stocks. You've got all these different types of companies that have nothing to do with each other, and you see it in the trading. You see insurance stocks doing one thing and regional banks doing a complete other, and they're all in the same sector. Berkshire Hathaway is the largest component of the U.S. Financials Index. Understanding the composition of these sectors, something like technology, half of that is Microsoft and Apple. You look at consumer discretionary, a quarter of that is Amazon. But if you look at industrials, no company represents more than 4% of that entire sector. So it's a much more diversified sector. So all of these are giving you different information, and it's about weighing all of the evidence to be able to find out where's the strength. Are we buying strength? Where's the weakness? Are we selling weakness? Avoiding weakness? Where's the rotation? Sector rotation is the lifeblood of a bull market. We see that. We've been seeing that since last year. Remember, the new 52-week lows list peaked in June of 2022. Since then, it's just been broadening participation higher ever since. The back half of 2022 was actually very solid. Most stocks went up. It was much easier making money from the long side than it was from the short side. That was the beginning of the bull market. It's just that technology stocks and large cap tech weren't participating in that strength. That didn't come until January. So you got that sector rotation. In bull markets, the laggards catch up to the leaders. In bear markets, it's the opposite. The remaining leaders catch down to the laggards, right? What we've been seeing for 18 months, because we're recording this in January of 24, has been expansion in participation to the upside amongst countries, sectors, industry groups, and stocks. When that starts to change, fewer stocks are making new highs, fewer countries are making new highs, fewer sectors and industry groups are making new highs. When that starts to occur, that is likely to occur in advance of any major topping that could take place in this ongoing bull market. So that's how I look at technical analysis and why we do that bigger picture view.
You're taking a look at a more holistic set of, indicators, other markets, and using that as your data in order to give you insights as to whether or not you're going to feel comfortable, buying or selling a stock.
Before you do anything is identify what type of market environment are we in. That's it. Are we in a market environment where we want to be buying stocks? Which ones? Are we in a market environment where we want to be selling them? Are we in a high volatility environment? Are we in a low volatility environment, right? What does that look like? Because without that information, you can't decide which tools and strategies to implement. First, you identify the market environment and then decide which tools and strategies are best for that market environment. Why would you incorporate a strategy that works best in high volatility environments when you're in a historically low volatility environment? That wouldn't make any sense. Why would you be incorporating strategies that are good for bull markets when we're in a bear market? Why, right? You know what I'm saying? Like these are the things that we want to think through. And without taking that holistic approach, how could we possibly identify what type of market environment we're in? Right? So first we identify the market, then we decide what we're going to do about it versus people just blindly, well, if this line crosses over that line, you to the moon,
Right. Yeah, absolutely. I'm with you. And if it's okay, JC, I'd love to rewind a little bit and figure out how you got interested in the stock market and trading. How did this all begin for you? Because clearly you've continued for years to have an interest and a passion for the markets. Where did it all begin for you?
My family wasn't really that much into the market. It wasn't like, dinner table talk. I have a lot of friends where it was, their fathers traded or worked on Wall Street. I went to college in Connecticut, so a lot of my friends' fathers worked in finance in one capacity or another. A lot of them, I didn't have that, right? My parents like invested like in mutual funds in the 80s and stuff like that. You know what I mean? Real estate, entrepreneur, they bought businesses and stuff like that. I went to college, like I said, in Fairfield University in Connecticut and played baseball there. I grew up in Miami. My family's Cuban, so I played baseball. If you can imagine that. So, my curveball got me into a better school than, I had good grades, but I didn't have Fairfield grades. Fairfield's even tougher to get into now, is my understanding. But anyway, put me right in Fairfield, Connecticut, the ground zero for hedge funds and, a lot of finance and, proximity to New York City is obviously an extension of that. So I interned at Merrill Lynch in when I was a junior in college. And that summer I lived in New York City, lived in Manhattan for the first time. This was 20 something years ago. And It was love at first sight for me. I was reading the Wall Street Journal and IBD every morning on the trains, going back and forth, reading the New York Post, the free ones that they used to give, like when you go into the subways, I forget, like AM New York or whatever, like it was for me, Wall Street is for me, the stock market, New York, like I bought into the whole thing. It was fantastic. I couldn't afford living in Manhattan after college. I lived in Hoboken for a couple of years, would commute in. I was working for a small brokerage firm. I was working with Josh Brown, for a while early on in my career. They started a hedge fund by the time I was, 29. And, I started the blog in 2010 because, all of this FinTwit, all of this all these blogs, all of that was these were part of the implications of the great financial crisis where, everybody finally agreed, you can't trust Wall Street, this is all their fault, and you can't trust the financial media. They missed the whole thing. So we can't trust anybody. We got to go straight to the source. If you're interested in economics, you go to the guys that have the economics blogs, Barry Ritholtz or whatever at the time. If you're interested in venture capital, you go read Fred Wilson. Maybe you're interested in technical analysis. There were a couple of technical guys before me. Brian Shannon, who we just talked about, had a YouTube video and was blogging a little bit at the time. If you wanted more financial advisor stuff, you got that. You got the psychology stuff. Brett Steenbarger was doing a whole bunch of things. Options trading with Chicago Sean, there was already like a core group of blogs that were early before shit really hit the fan. And as shit was hitting the fan, the blogs became a source of information in Twitter to communicate what was actually happening from the experts versus, playing telephone and hearing, through the pretty lady on the TV or whatever, right? Like we knew that didn't work anymore. And everybody came to that conclusion kind of simultaneously. And that's what sparked what you see today of FinTwit. This was 15, 16 years ago. And these were happy hours in Soho. That's what this was. Journalists, financial journalists that were market junkies, traders, investors, VCs, just all getting together in Soho over drinks and food. That was the beginning. And now, and I've traveled and I've, 25, 30 countries around the world, all over Europe, Asia, everywhere. And I have met people in each and every one of these cities that I met online, on Twitter and stock twits over the years. And these are friendships that I'll have forever. As they say, Facebook is where you follow people who that you have nothing in common with. On social media, Twitter, it's people who you don't know that you have a lot in common with. Is really what that community has really turned into. And I have dear friends all over the world because of it. So I'm forever grateful.
Absolutely great. And yeah, just to echo your point, social media and the world that we live in today is really the place where you feel like these individuals, even though you've never met them for the most part, in actual real life, but so much about them, case in point being you and me. I followed your stuff for years, never met you, but you still feel so connected to these individuals. One of the questions that I had for you, JC, was for all that you know today, how would you say you built your foundation?
Yeah, the truth is most of it is trial and error. You start checking things off that don't work. And, early on, maybe a few years in, my initial education was just reading books, Liar's Poker, like all the books they tell you to read at least 20 years ago, Liar's Poker, Jim Cramer. This is before the whole, CNBC Jim Cramer thing. This is way back in the day. Confessions of a Street Addict, amazing book. Liar's Poker, Predator's Ball. What else was I reading back then? Peter Lynch. One Up on Wall Street, I think it's called. I read all these books. Those were the ones that they, so that was my initial formal education, Wall Street, in addition to, buying things that went down and selling things that went up and making all of those mistakes that we all make as investors, regardless of time horizon. And then I hit that fork in the road when it's like, okay, I'm a big boy. I need to learn something. Like, how do I further my education? Should I get a master's, like an MBA? That's not going to help me in the market. Like, there's no reason for me to do that. I'm not going to climb up some corporate ladder, right? Like, that's just not how I'm going to roll. I could go get a CFA. That'll be good, but CFAs are more like understanding companies. And I don't really give a damn about companies. I care about stocks. So that's how I got the CMT, which is a chartered market technician, very similar to CFA, 3 levels, the whole thing. But it's about the market and the behavior of markets and stocks and assets versus companies and valuations of companies. I'm not really interested in any of that stuff because there's such a disparity between the value of a company and what it's actually trading for. So that's not for me. So CMT seemed like a good idea at the time. Little would I know how much that decision would ultimately impact the rest of my life. So, good thing I made that decision. That worked out well. But, again, love at first sight again, right? So it was like, I hit, Merrill in 2003 and, fell in love right away. And then I hit, page 1 of John Murphy's financial markets, technical analysis of financial markets. And I was like, oh, okay, this makes sense. I got this, got it. So we could just use math. Oh, okay. Instead of all this other nonsense, like, great, I know math. I can do this. And it's very simple math, which I really liked also. It's not like this like calculus, right? Like it's very addition, subtraction, multiplication, and division. I'm great at those, right? It's once you get a little further away that things get more complicated, and we got calculators for those, and I got Excel ninjas that I hire, and they do all that shit. So I don't have to worry about any of that stuff. The basic 4, I'm in. So the rest is history. Finished my CMT, thought I knew everything. I'm the next Paul Tudor Jones. The worst thing that ever happened to me is that I nailed the 2008 crash. Nailed it. I shouldn't say the worst thing. There were implications from getting that right at such an early age. And, I always, for years after that, as successful as I was in that particular year, for several years later, I wanted to call the next one. I wanted to nail, because it felt so good having all these older, smarter people telling me how great I am. I'm like, oh yeah, this is fantastic. But of course, at a young age, I'm 26 years old, everybody telling me how great I am. I'm a CMT, like, oh, forget it. Not good. But again, another good lesson to learn, don't fight trends. You don't have to be a perma bear. These crashes almost never happen. I didn't know that then, right? It was my recency bias was oozing out of me. It was not healthy. But again, a very valuable lesson that I wouldn't change for the world, right? So I understand, just because you're hitting the top of the chart, like on your page, doesn't mean that there's resistance there, you see. You got to pinch the y-axis, and then you'll see there's plenty of room to the upside. And it took me a while to learn those things, and I'm going to continue to learn, and I continue to make mistakes every year. I mean, there's no question. And, as long as you're continuing to progress and you're taking those painful losses and memories and you're turning them into something positive, I mean, that's really all we can control. So that's really where my focus is. And over the years, my interests have changed. I got really deep into the psychology of things. I mean, I was talking to Denise Scholl this morning, who's like, she's my hero. She's awesome at all this stuff. I talked to Annie Duke. She's great. She's amazing. Dr. Brett Steenbarger. I mean, he is the man. Like, this is Paul Tudor Jones' personal trading coach, and we get to talk to him. Like, how cool that is? Like, whatever he says, everybody just shut up and listen, right? Like just those psychology guys, Dr. Phil Perlman, Andrew Maneker out in San Francisco, like these guys I'm fascinated by all that stuff. And because that's really what it comes down to. It comes down to the psychology. And one of the things I was talking to Denise about is that I've gotten better over the years at understanding market sentiment and not only recognizing my own flaws as a human and therefore as an investor, because when our stress levels are elevated, we revert to our evolutionary behaviors, and which is very opposite of what we should be doing in the market. So understanding my own flaws and understanding that there's all these humans that have those same flaws, and most of them either can't do anything or can't overcome them, and an even larger majority don't even know that they have those flaws. It's our job as investors to take advantage of their flaws, right? So not only recognizing your own habits, they have those same habits, so exploiting them for our own profit is part of this process. And she sort of reaffirmed that that's precisely a huge advantage and something that I should be doing, which I'm super stoked about, because the fact that she said that I'm doing something right, I should do more of that. You know how happy that makes me? Like, hell yeah. One for the good guys. So over the years, I've gotten much deeper into understanding the human behavior aspect of it, because that's truly what's driving prices. It's not fundamentals that are driving these prices. It's positioning or mispositioning or extreme positioning that needs to unwind and mean revert amongst institutions, right? When they're all on one side, the mean reversion is very powerful, and that's what's driving prices. So understanding the psychology behind all of that gives us sort of an inside look as to how the biggest players are positioning and where the pain is, and being able to take advantage of that unwind and that pain being released into the marketplace can be very profitable. So, it's sort of building upon, when you say you stand upon the shoulders of giants, there's on a more micro personal level, there's that. Like, you've got your baseline understanding of the market. You understand volatility and equities, and just understand that. And kind of adding additional layers, I think is something that I've been able to do successfully over the years, which is, in looking back on it, is pretty cool. So I'm really curious to see what additional layers I pile on in the coming decades. But yeah, continuing to learn. If some people are in the market because they think they can make a lot of money, versus being in the market because it's something that you love and something that you enjoy doing, waking up every day, checking the futures, taking a shower, wondering, there's a jobs number came out at 8:30. I wonder how the market's reacting to that. Like, I don't know how I wouldn't be able to live any other way. It doesn't matter how rich I ever get. I can't see a situation, and maybe I'm wrong, I guess we'll see. I can't see a situation where I'm not going to be checking in on what the market's doing and maybe tweeting something, obnoxious about it, right? Like, I don't know, I don't know how I won't do that. Like, there's a game going on. I want to know what the score is.
Mm-hmm. Yeah, absolutely. It's important to stay up to date and keep your pulse on the market. And, the market, especially with even cryptocurrency these days, the market's just continuing every minute of every day somewhere in the world. So,
and if it's a hassle for you to have to check on what the market is doing, you're probably in the wrong business. Go do something else. You have to want to be like, I wonder what Bitcoin is doing right now, and you go check, right? It's just it's got to be in you. You can't fake it, and if you are faking it, you're not going to be successful at it. It's hard enough if you love it. So if you hate it, there's no way you're going to make it.
Whether you're looking to stay up to date with the markets or surround yourself with experienced traders, Investors Underground has something to offer. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms where you'll find a vibrant community of focused traders who share their trade ideas in real time every single day. You'll also have access to the updated morning broadcast where Nate and other members of the IU community share their trade plans for the day ahead during the pre-market session. You'll have access to the members-only midweek study session with Sam, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of the podcast can access special deals at investorsunderground.com/YouTube. And now, back to our interview with JC Parets. And speaking of, not doing well or struggling, what advice would you give to the traders who are struggling and are looking to be profitable in the market, but just not being where they want to be? What advice would you give them? And what have you learned over the years from working at a professional level, managing money and making money in the markets that you think a lot of retail traders might be missing?
Yeah, listen, no matter how successful you are, there are ways to improve, right? I talk to traders every day, and we're always doing something. Like now our new thing that we discovered is that we're not organizing our trades enough, combining different brokerage accounts so that we can analyze, everything's kind of a little bit too separate, and it's not just me. I'm old school, I use a spreadsheet. There's probably a better way to do that, right? So we're working on that internally. For example, right? That's just a recent example this week. So just keep that in mind. So if you're young or first starting and that's continuing to improve and finding ways to get better is never going to change. And if it does, you're not going to make it. always working on it. So I would say, go and see, what the biggest mistakes were that you made in the year. Did you not cut your loss fast enough? Right? Were you not quick enough to the trigger and you took you had a huge drawdown when that could have been, for the most part, that's probably the biggest mistake investors make, is letting the drawdowns come too much and not pulling the plug quicker. So having a plan and following that plan where it keeps you disciplined and you stay disciplined and execute accordingly, or whether that be using stop losses or whether that be using a derivative strategy where your risk is minimal and you accept that risk, right? When you enter into that situation, there are ways to manage risk through derivatives. There's ways to manage risk through position sizing, right? You like that biotech, you don't have to put your whole portfolio in this $2 biotech stock. But if you want to speculate on something like that, you could put a portion of your portfolio in that. Like, I don't see anything wrong with that, right? So, think about it like that. And then, a lot of people, have a hard time. And by the way, these are common traits: not cutting your losses fast enough, not letting your winners run long enough. Also a problem. Also something that we're working on internally amongst our team. For example, one rule that we've been following for years is when our call options double in the options trades, when our call options double, we take half off the table immediately. And now we let the rest go with house money, really let it run, get closer to expiration. We took half off the table. It's all house money, all those things. I really like that strategy. But internally, we've been battling with all of us that are traders, talking about how versus just locking that in on a double, maybe raising stops so that we can capture more of a profit. And that's something that we've been working on amongst us internally. So we're working on that too, right? The cut your losses and let your winners run is like easy to say, but it's harder to do. So I feel like every investor ever is trying to do both of those things always, no? Right? So I'm just giving you a couple of literally real life in real time examples of us improving on some of these things. Maybe widening your universe, maybe incorporating more top down so you get, things are more into, you can put things into context better with what's happening around the world, taking the time to look at the internals of the market and not just a percentage of stocks above their 50-day and a percentage of stocks above their 137-day moving average or whatever. Like, you can quantify that stuff, and we do, but there's a lot more value in actually looking underneath the surface at, hey, all the stocks in this sector are going up, the rest of the market is falling, what's happening here, that sort of thing, putting in the work. And if you don't want to do that work, find somebody who does and get their notes. Not a lot of people want to do that work, right? But find somebody who does. See what they tell you.
Yeah. Absolutely. Thank you. And I wanted to talk a little bit about data because, you have some amazing charts. And so what type of data do you prioritize and where are you going to get this data?
We prioritize the prices of assets. Like that's it. It's just the prices of assets. We get the data from different sources. So we get our data from the New York Stock Exchange, from the NASDAQ, from the Malaysia Bursa when we're looking at Malaysian stocks, because we're looking at individual equities in other countries, in the National Stock Exchange in India, for example. Some data is easier to get than others. Quandl is a great website that we use. I think they were acquired by somebody, maybe the NASDAQ or something. Somebody else owns them now, and they have a bunch of data sets that you could buy, and you can, we use Optima for our data visualization, so you can bring in data from Bloomberg or from, I'm looking at it right now. I'll tell you right now, you could bring in the data from, the American Futures Exchange, the Asian futures, we bring in our cryptocurrency, all that stuff. We've got, so I use CryptoWatch, I use Fred, I use MT4. I can't imagine for what, but I'm sure I use it for something. eSignal I use for intraday data, and I use Owanda for something. I'm not really sure what I use that for, but those are my data sources. But you can connect to a whole bunch of others.
And how do you prevent information and data overload? So how important is it for you to filter out what you're looking at and say, this is what I want to be looking at day in, day out? How important is that for you and that process, for other traders out there?
No, that's a great point. And, I think that the multiple timeframes is really helpful for that. So at the beginning of every month, we get new monthly candlesticks, right? These are new monthly data sets. There's only 12 data points a year. So what that allows, and so that I would encourage everybody to do this. Take whatever you think are the most important assets in the world, the 50 most important assets in the world, 100, 20, whatever. Everybody's different. For me, I'm like at 100, 120. And look at the monthly charts, because we know asset prices trend. We know the long-term trends are the most dominant of all of those trends. And looking at these longer-term monthly candles not only helps us identify these longer-term structural trends, it forces us to, because it makes you zoom out. So it's very easy, even myself, all of us, oh, what did the Dow do today? What did the Yellen say? Oh, the rates and the this and the that. But once a month, you take a step back. You take a big, deep breath, and you come back home, right? I don't know if you do yoga, but people who do yoga, right? When you start thinking about all kinds of crazy stuff, you want to come back to your breathing. Just think about your breathing, right? It brings you back home when your mind is going crazy. It brings you back home. These monthly candles is like that, right? It brings you back home. Oh, yeah, that's right. This one's been going up for a long time. Oh, yeah, this one's been going down for a long time. Oh, this one's still a mess. It reminds you of forces you. So pick whatever group. And if you don't have your list, email me. I'll send you my list, right? Because my list it's not going to be exactly what your list might be, but it'll get you pretty close. I mean, U.S. 10-year yield, 30-year yield, S&P 500, NASDAQ 100, Dow Jones Industrial Average, Dow Jones Transportation Average, Russell 2000, German DAX, Japanese Nikkei, the Emerging Markets ETF, gold, silver, crude oil, copper, right? Like just common sense, like just, the most important bellwethers, JP Morgan, Microsoft, Apple, Tesla, Amazon, the bellwethers of this market, Freeport McMoran, the Latin America ETF. Like, my list, it might not, you might think that some things are important that I don't care about, and I'm going to think about some things that I think are important that you're not going to care about, but my list is a pretty good starting point. But like, make your own, like use common sense, so like that's really how I think of how to avoid the noise. How do you avoid data overload? It's by coming back home. And then once a week, I look at all the weekly charts. So like I'm looking at every country around the world. Doesn't take me very long, on a weekly time frame. Every currency around the world on a weekly time frame. And within reason, not literally every country. Like, you don't have to maybe look at the Kampachi 30 index, if you don't care about Pakistan, but it's in my list. Like you can just keep it real for yourself. In the case of the sectors, there's only 11 sectors. So 11 weekly charts, a handful of indexes, about 20 charts will tell me right away on a weekly basis what the U.S. stock market did in 20 charts. I'm a little OCD and I do this for a living, so I'm looking at more than that. But at the very minimum, you look at your 100 monthly charts once a month. You look at your, 20, 30 weekly charts once a week. Like that alone might take you half an hour a month, maybe. So that is half an hour a month. That's 6 hours per year. That is going to infinitely help you in your process, and find me a better use for 6 hours in your year. You can't. I've thought about it myself. I can't.
JC, over the years, how has your trading style evolved? At what point now are you trading long versus short? Are you trading more options than equities? Sort of what does that all look like at the moment, January 2024 for you?
Right. Well, I'm trading more cryptocurrencies today than I was 20 years ago. I'll tell you that much. I've traded it all. Equities, options, futures, ETFs, stocks, the whole thing. My strategies were different. I had a lot less money years ago than I do today, so I think differently of it. I have a family today I didn't before. I have real estate now I didn't before. I am an entrepreneur. I sold, my company was acquired. That comes along with other benefits, pros and cons to that. So like things are, things are more complicated now, which is fine, right? And that's not necessarily complicated and a bad thing. There's just more going on. I'm older, there's just more shit going on. So I got college funds, that I'm allocating money to. So there's a variety of different strategies. And, in my experience, once you've accumulated wealth, you could do whatever you want with your money. For me, I like to have a diversified net worth, essentially, where I'm not overexposed in any one area. I don't have to be now, right? And I have kids. So I'm looking for, as much as I can, a handful of uncorrelated strategies, right? My real estate and my equities portfolio is probably going to move, probably not in the opposite directions. And I understand that. But to the extent of my power, of what I can control, I like looking for, we have a strategy where we're selling strangles on very liquid ETFs every day and collecting income that way. That strategy is going to have nothing to do with the direction of the S&P or my real estate, for example. My cryptocurrency portfolio is going to look, maybe higher beta, but it's going to look like my long-only equities long-term portfolio, right? There's nothing that I could really do about it, so I understand that. So we're doing more stuff from the short side, more of like a Jim Chanos approach, where you're looking for alpha by always being long the S&P 500, but then short specific equities against that. Looking for that spread, right? Looking for that alpha. And also a commodities mean reversion strategy, where we're looking at extremes in positioning and looking for those mean reversions and unwinds in those positioning when the equities, when the speculators are overly exposed in any one direction versus the hedgers, and looking for that unwind. That's also a strategy that we like. That's also very uncorrelated to anything else that we're doing. So, that's sort of how I think about it.
Okay, thank you. And JC, if it's okay, I'd love to go through a lightning round set of questions with you. Pretty quick questions, pretty quick answers. Is that cool?
Done.
Awesome. What would you say is your greatest strength as a trader?
I don't care what the market does.
Are there any areas of your trading that you're still working to improve on?
I want to lose less and make more.
Are there any misperceptions about the market that you believe analysts get wrong about the market?
I think the biggest mistake investors make is ignoring what the market is actually doing. They're more focused on what the market could do or should do, but they're not focused on what the market is doing, and that's the best information.
Are there any specific technical indicators that you keep on your charts that you believe are especially helpful for you to make investment decisions?
The prices of assets. That's the indicator that you want on your charts. Everything else is a far second. Anything else that you look at is just a supplement to price. Price is what pays. That is where we want to focus our attention. That is the truth. It's undeniable. It will not be restated. And we know for a fact that asset prices trend. So if you're ignoring the trends of asset prices, you are doing yourself a disservice.
And JC, you've worn many hats, from analyst, to managing money. What are some of the biggest lessons that you've learned throughout your career?
Surround yourself with smart folks that challenge you, that you can learn from. You don't have to do everything alone. This doesn't have to be the JC show 24/7. Bringing on other members of the team that are good at other things that either you don't do as well or, quite frankly, don't want to do, right? I got my spreadsheet ninjas that do all the things that I don't want to do. I mean, I'm smart enough where I'm sure I can figure it out. I'm sure it'll be fine. It'll take me forever, but I don't want to do it. So I hire somebody else to do it. So, that's something that I see a lot of people fail at. They try to take on too much on their own. It's hard to keep up. It's hard to grow. When you put trust and faith in others around you, it empowers them, and it just makes you better, I think.
Is there anything that you do away from the markets and your desk that you believe helps you as an investor and trader?
Yeah, for me, I got a family now, I got kids and stuff, so that works for me, and I have a 3-year-old and twin boys that are 1, so that takes up a lot of my time, and for me, that fulfills that. But prior to that, there were other outlets like skiing or running or playing basketball. Like just staying active. I have friends that do all kinds of stuff. I got one guy who takes ballroom dance lessons with his wife. I'm not that guy. I'll do other things. And now I got kids that takes up that time. So it's really about finding whatever it is that you like to do. It doesn't even matter, go to baseball games or, go study bridges, if you're into bridges. Like, it doesn't even matter. It's just not the market. If a lot of people, because the market is there's dopamine, right, hits left and right. And if you're getting your dopamine fix out of the market, that's not going to end well. That's going to make things challenging. If you're getting your dopamine fix somewhere else, I think that's probably much better.
And JC, you've lived a number of places in Florida, New York, California, visited all around the world. Who makes the best pizza?
What city?
Your favorite?
Oh, my favorite pizza, single pizza? Oh, that's a good question. I'll give you a few. I like L&B Spumoni Gardens in Brooklyn. I like Prince Street Pizza in Soho. Listen, Lombardi's is the oldest pizza place in America. I was actually just there the other day. It was delicious. I was drinking a little Chianti. It was lovely. So if I'm going to add a third, we'll add Lombardi's in there. Classic.
So I'd love if you can give our listeners and audience sort of a food and wine pairing leading them into the weekend. Could you do that?
All right, so I'll give you my favorite. My favorite for me is a ribeye, and I've gotten into, I like to put together. I get some butter, some gorgonzola cheese, mix it together, cut some rosemary, sage, and thyme, and make like an herb gorgonzola cheese butter. If you like your cheese funkier, go with the full blue. I'm more of a gorgonzola guy, but that's just me. There's no wrong way to do it. Cook that ribeye, then put that, as it's sitting, as it's resting, put that gorgonzola butter mix on top of that. And I think you want to go with a left bank Bordeaux. This is going to be primarily Cabernet Sauvignon and or 100% most likely, gravel soil. You're going to have this funk that Bordeaux is going to give you. Make sure it's got at least 6-7 years of age on it. And that funk is called Brettanomyces is what you're looking for. It's going to go great with that funky cheese on the ribeye. That's the move.
Awesome. And JC, for those who are interested in learning more about you, how you trade, how can they do so?
Go to allstarcharts.com. Check it out there. Follow me on Twitter at allstarcharts. Join us on stockmarkettv.com, the morning show, every morning at 8:30 a.m. Us internally, we're doing this anyway. Talking about what the markets were, what are the big SEC filings from the prior day, what's moving this morning. We always have a cool guest on. We always have members of the team, whether it's options or crypto or, some of the scans, but we always have guests internally on as well. Morning show. So that's on stockmarkettv.com, and follow me at All-Star Charts.
And highly recommend everybody listening, go check out JC and what he does. He's an absolute gem in the finance world and just amazing. So much knowledge that you've given. Thank you so much, JC, for all you've done and for being here to talk with us today.
Thanks for the invite. Appreciate it.
We hope you enjoyed this interview on the Investors Underground podcast. We have more great interviews that we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they become available. Thanks for watching.